Welcome back to your next module in the 14-day course. Today is day 10, Advanced Harmonic Patterns, and this is a complete hand-holding on how to identify and trade the most advanced market patterns. Now in today's game plan we have 3 topics lined up. We're just further advancing what we learned in day 9. Today we'll be learning bullish and bearish Gartley, which is another type of harmonic pattern, bullish and bearish butterfly, and then bullish and bearish crab. So we have 3 more harmonic patterns lined up in today's module. Yesterday you learned about the bullish and bearish bat. So these are just different variations of harmonic patterns. So just to review very briefly what we learned in day 9, this was your introduction to harmonic trading. It is a measurement-based approach that focuses on natural price patterns in the market. They form in all time frames, all financial markets. We can use these formations on the 15-minute chart, the 4-hour chart, the daily chart. We can use them in Forex, stocks, commodities, even cryptocurrencies as well. We learned that M's, these are bullish type formations, and W's, these are bearish, meaning we're looking to sell. And what does PRZ mean? If it's the only thing you remember from yesterday, it means the potential reversal zone. And this is where you're looking to execute the trade. Once you can confirm that price has tested all of the ratios within the potential reversal zone, and the last price bar to test the price bar to test the last measurement in the zone is what we know as the terminal price bar. Once that has been established and that price bar closes, we're then looking to execute the position. We're looking for a reversal in that area. And yesterday you learned how to trade the bat pattern, of course, the bullish and bearish bat. You learned 2 variations of it. And today we're going to cover several other formations. And the first one we're going to cover is the bullish and bearish Gartley. So here we have a bullish formation. We go from X to A just like we did with the bat pattern. We've got our B point, the midway point of the pattern, the most important point in the entire formation. This distinguishes several formations from others, such as if we have a 50% retracement, we can expect it to be a bat pattern. If we have a 618, we can expect it to be a Gartley. And this will make more sense as we progress throughout day 10. Now we've got our C point, which is a retracement of A to B, and then the finalized point in the pattern, which is the D point, and this is where we're looking to execute the trade. The B point is a strict 0.618 in this situation. Of course, there is a small allowance. There's a small degree of flexibility within that measurement that determines the pattern valid or not, but we're really looking to confirm that exact 0.618 measurement. The C point is 0.382 to 0.886. We really need to confirm that minimum 0.382 measurement. That can be the wick of the candle. And the maximum 0.886, we really don't want to go too far beyond that. And we want it to be as close to that 886 as possible. The D leg, the BC projection, we're looking at a 1.13 to 1.618. And if we just look at that A, B, C, D within that formation, if we look at just those price points, we can see how symmetrical that is. And there is an additional measurement that is required in this formation, and it's not mentioned until the Harmonic Mastery course. As mentioned in yesterday's module, we focus on another measurement in harmonics, an ABCD measurement, and this won't be introduced until the Harmonic Mastery course. For now, I want you guys to become familiar with the ratio measurements and the M and W type structures. That's all you're focusing on just now. And the last measurement, this is what defines the D point, completion. The X to A retracement of 0.786, and that sets up the entire pattern. So the 786 and the ABCD, those are the 2 most important measurements in this overall structure. We're now looking at a bearish Gartley. We're going from X to A. We've got our midpoint in the pattern. Then we've got our AB retracement, which gives us C, and then our D point. And we can see how symmetrical price points A, B, C, D are in this formation, and that's really what you're looking for. You're looking for a symmetrical formation. This is spoke about later on in the Harmonic Mastery course. We talk about symmetry in the financial markets. The B point, we're looking for a precise 0.618. We're looking for price to test that level. It can be slightly below or slightly above, and we're really looking to have that within a close proximity. So just remember that I mentioned that in yesterday's module with the bat pattern. The C point, we're looking to confirm that minimum 0.382 measurement. And we don't want to go too far beyond the 0.886. We want it to be as close to that number as possible. The BC projection to give us our D leg or D point is 1.13 to 1.618. And this complements the XA retracement of 0.786. This gives us our X to D 0.786. That defines the D point. And these will all form within a close area in the potential reversal zone. And we're looking to confirm those ratios before we enter the trading position. So what I'd like to do now is go into TradingView, just like I done yesterday. I'll give you a few market examples of a bullish and bearish Gartley, and I'll do the same with the other patterns today. Alright, we're on TradingView looking at silver on the 4-hour chart. First of all, we'll start off with a bullish Gartley, then we'll look at a bearish Gartley on Euro Australian dollar. Going to use the XABCD tool just to speed up today's module. I just don't want to drag it out too much for you guys. We're starting off with identifying this M-type structure, just like we did with the bat pattern. We're starting off with the XA leg. We're going from the lowest to the highest point. And we're looking to go with the lowest point. We're not going here or here. We're going with the lowest point in this area. And we can see that confirms that 0.618 is within a very close area of that ratio. The C point comes in around about 0.618. And we're looking to confirm the D point with this XA retracement, which is 0.786. And we can see we've got that ratio right there. The maximum for this D leg, we're really looking at 1.618. And it comes in at around a 1.414 in this area here. And there's quite a lot I want to talk about on this chart. First of all, when we're using the XABCD tool, I think it's good to get into the habit of looking where the exact ratios align. And what I mean by that is manually drawing in after you've identified the pattern. So we can see this is the 618 for the B point, the precise measurement. We can see how exact that is. Price reverses after testing that 618 and then forms our C point. The C point also forms a 618. And I'll illustrate this just now. But just add in a few more ratios. We're going from A to B. That's our retracement for the C point. We've got a 0.5, and the next ratio above that would be 0.707. We can see how close price is to the 618. This is the flexible framework that I've been talking about. When price is closer to this ratio, such as a 618, we need to consider it a 618 rather than a 50%. Although price confirmed this ratio is within pips. It's within pips of this ratio, this 618. So we really need to consider it a 618 retracement. We're then looking at the BC projection. And this is an interesting situation because although the 1.414 forms at the same level as the 0.786, price actually confirms a 1.618 below that before the reversal, and there's a very good reason for that, and I'm going to explain it in just a moment. I'll add in the 0.786 measurement before we do. We're going from X to A, but just double click and add in that 786 measurement. Trying to keep the charts as clean as possible so you guys don't get confused with all the measurements I've been adding in. We can see that the 786 confirms in this area here exactly where we've measured it with the XABCD tool. We've got this BC projection. The 1.414 complements the D point. It's always a complementary measure when we're using that BC projection. But price continues below the D point, and this happens in a lot of trading situations, and it's typically because there's additional measurements or the downtrend is continuing and the reversal is not taking place, therefore it would be a losing position. But not in this situation. It was a profitable trade. And this is because we have an additional measurement in most harmonic formations called the ABCD. We're looking for these sine wave structural assessments, and this is explained in the very first or second video in the Harmonic Mastery course. If I just draw it in for you guys, and it's all to do with reciprocal ratios, and I don't want to overwhelm you at the moment, but this is where the additional measurement would have complete at this 1.618. That's really what we're looking for, is the additional measurement. So what we have in this potential reversal zone is a 1.618 BC. We've also got the ABCD, this additional measurement that we are defining at the moment, but won't be explained in full until a later point. And we've got these all forming within a close area. You can see we've got the 786. And we can see how price tests this final measurement in the zone. And that would be the terminal price bar. And after this candlestick closes, if we just zoom in on that, after this candlestick closes right here, that's when we're looking to get into the move. We're then looking for a reversal confirmation. We're looking to get into the trade. And of course, you can see how successful this move was. Straight to the upside after that confirmation of the 1.618, which is really the maximum measurement we're looking for the BC projection, for the D, around about the D point in the potential reversal zone. And we can see how accurate that really is. And within that one move there, the take profit level would have been around about this area, here. And that would have closed, and bear in mind this is on the 4-hour chart, this would have closed within 1 month. Around about 1 month, based on the entry point. This is on the 4-hour chart. A really successful move. I really do like the look of this setup. And this was actually back in the end of 2017, around about December 2017 this took place. I had this posted on my TradingView. The next setup we're looking at is Euro Australian dollar on the daily chart. We're looking at a bearish Gartley this time. And the reason I've picked this chart is because there is a lot of confusion in harmonic trading with where should I start? Where should I pick my high from? Where should I select my pattern from? Should it be this high here? If we draw an XA, we can see that's closer to the 50%. We would then have to consider that a bat pattern. And we know that bat patterns, they complete around about this area here. So it could potentially be a bat, but we can see there is some downside. So price would need to return to that D point to confirm. So potentially could be a bat. Not the best looking bat with that X to A leg. I'm not really liking the look of that. Or is it this high here? And as you'll see, this forms very close to the 0.618 ratio we need for the Gartley. And the Gartley confirmation, the XA retracement, I'm sure it was on this high here. That's when it first confirmed. So we can see we've got the 0.786, the B point, just below the 0.618. As I've mentioned multiple times, you're looking for these ratios within a very close range. The C point comes in at 0.5. And there's a very good reason why prices move beyond the D point. And it's this additional measurement. This additional measurement I keep talking about. And this will explain why price will push beyond D before we see any type of reversal. And this additional measurement, it completes around about this area here. By just drawing the exact ratio. So we're looking to confirm this price level. You're really looking for ideal symmetry as well. And we can see after it confirmed that price level, didn't go far above that price level, and that's when we got the reversal. So this additional measurement, it's important, especially in the Gartley. It's required, and that's why we sometimes see price go beyond the D point. But just keeping it simple for now, we're only looking at this W or M type structure. We're not looking at additional measurements. I feel it's just worth noting so you guys can understand the importance of this in a trading situation. And what if you took this high here? We can see price closes towards a 0.786 ratio, very close to that ratio. Got a confirmation of it. And it's funny because this is actually the next pattern we're about to cover. If I just show you how exact this is. Going from the highest point to the lowest point, of course this is the start of the move, depending on which high you draw your patterns from. The B point in a butterfly, this is what's known as a butterfly pattern. This is 0.786. We're using the same C point measurement as we do for the bat and the Gartley. And the maximum is 2.24. And we're looking for an X to A of 1.272. And we can see how precise that measurement is. And one thing I want to illustrate is when you're drawing in these patterns, there's always going to be questions that you have, especially with beginner traders. It's quite an advanced methodology. It's difficult to understand, especially straight off the bat. You really need to apply these formations in your own time and gain experience, real experience with these formations to fully understand them. And one question that popped up was, Lewis, let's say your D point was over here. Lewis, price took a bit longer to hit my D point or to hit the same price level. Does it need to hit exactly on D, or can I enter the trade at the same price level? And you're really just looking to confirm this price level. You don't need price to hit exactly at D. You don't have a crystal ball. You don't know exactly when price is going to hit the D point. We can, of course, anticipate price action, and we can plan ahead. We can analyze these formations and project when price is going to hit D. But we can never be exact. We're not always exact in when price will hit D. Sometimes it may take longer to complete, but you're really looking to confirm the price level. So once price confirms these ratios within the potential reversal zone, is what we know as the potential reversal zone, you're then looking to execute the trade. So it's not that price has to hit D exactly. And that would be an extremely precise way in trading if that was the case. You're really just looking to confirm the price levels. You're also looking for a certain degree of symmetry as well. That holds an overall better structure for the formation. And like I said, we're not focusing on these additional measurements at all at the moment. We're only focusing on the M and W type structures. And the fact that we've got a butterfly in this situation, which completes here, and going with the higher price leg for X to A, we've got a Gartley that completes in this area here. And the additional measurement for the Gartley, which we've not fully explained yet, and we will go into that at a later point, completes in this area here. This provides a lot of harmonic confluence, where a lot of formations, they form within a close range, and that is what provides really powerful reversals. And this, if we can break this support trend line, which appears to be happening around about this area here, I'll just draw this in very quickly. It appears that price is actually breaking out of that support, looking to push further to the downside, and that could result in a really successful formation, a really successful trade, just based on this entry point up here. Now, our next formation we want to look at, our next topic, is the bullish and bearish butterfly. And this is a formation that I gave you the example with the 0.786 B point. So let's head back onto the slide and cover those formations. The next formation we're going to be looking at is the bullish and bearish butterfly. And first of all, we've got a bullish butterfly. This is where the M and W type structure starts to differ. In this formation, the D point is actually lower than X, unlike the bat pattern in the Gartley. The B point comes in at a strict 0.786 measurement. It needs to be as close to that ratio as possible. The C point, we're looking for a minimum of 0.382 and a maximum of 0.886. Like all the other formations, we don't want to far exceed that 886 measurement. The BC projection to get this measurement at D, we're looking at a minimum of 1.618 and a maximum of 2.24. We don't want to go too far beyond that maximum measurement. And the XA projection in this situation, this gives us the X to D measurement, is 1.272. And the same again, we're just looking at a bearish formation. Of course, D is above X. We're looking at a strict 0.786 B point that defines the overall structure. We're looking at a C point of a 0.382 minimum measurement to 0.886. We're looking at the BC projection for the D point. This sets up around about the 1.272 XA projection. We've got a 1.618 to a 2.24, and this will be within the potential reversal zone, and it will relate closely to the XA projection. This gives us the X to D measurement of 1.272. And just like with the Gartley, I'll give you a live example of a bullish and bearish butterfly. We're back on TradingView. We're now looking at New Zealand dollar Swiss franc on the 30-minute chart. And I'm just trying to provide as much variation as possible. We've looked at the 4-hour chart, the daily chart. We're now looking at the 30-minute chart. And it's just to illustrate that these patterns do work on all time frames. I'm just going to grab the XABCD tool. We're going from low to high. And with the butterfly formation, it can be slightly more difficult to identify in a live market situation. Just because M's and W's, they are all different. They all come in different shapes and sizes. And this really just comes with experience, being able to identify these formations. With the B point, we're looking for a precise 0.786. It needs to be as close to that ratio as possible. There is a certain degree of flexibility in these formations, as I've mentioned several times now. The C point comes in at around about a 0.5 measurement, a 50% measurement for the C point. And we're looking for that XA projection of 1.272 to define the D point of the pattern, the completion of the pattern. And this really is just a nice setup we've got going on here. Really symmetrical price legs between A, B, C, D. I'm liking the look of that. If we just draw in the BC projection, we can see price confirms the 2.0 ratio, slightly above the 1.272 projection of XA. So that's really what we're looking at here. We've got these two ratios within a very close proximity. With a slight period of consolidation. Probably if we drop down to the 5-minute or 15-minute chart, we could have analysed that. Got a better entry on this formation. If we just draw in the XA retracement for B, we'll see how precise that 0.786 measurement as well. Exactly on that 0.786, just maybe a pip or two below, and that's when we got the reversal. We got our C point, which lined up just above the 50% measurement, and then we've got this convergence of ratios in this potential reversal zone at the D point. And we've also got this additional measurement that we've yet to define, and this complements this area as well. I'm just making you guys aware of that it does actually form in this area, which provides a really powerful setup, a really powerful reversal. And we can see how price slightly consolidates for several hours throughout the day. This is probably the duration of the day. Maybe it lasted for about 12 hours. And then we got the reversal. We can see from this candlestick here, this started to move, and we would have been out of the trade in this area here. This would have been our final take profit level. That's when we closed the trade in profit. It would have been around about this area here. And this trade would have been closed based on the entry point at this XA projection. This defines the D point. We would have been out of the trade within one day. 1 day and 8 hours. That's a really good position. And based on our risk to reward, which we will cover in day 12, if we're risking 1% on this position, we're always looking to make at least double. We're looking for a 1 to 2 risk to reward. That's what we call it. So if we risk 1%, we're looking to make 2%. So that would have been a really nice 2 or possibly 3% trade just based on this one position. A really nice move. It confirmed everything that we're looking for. That was the last ratio just below the D point. That this area here, we can see that this would have been the terminal price bar. Probably would have been around about this area here. Probably those candlesticks there. That was the first confirmation of the XA projection. And that's really what we're looking for. We're just looking for price to confirm the ratios within the zone, and then we're looking to execute the trade. We're looking for even a slight period of consolidation for a reversal confirmation, such as different candlestick formations. We can look for a hammer, doji, stalling candlesticks within this potential reversal zone. That's a good indication that price will, of course, reverse in that potential reversal zone. And yeah, this formation, I really just love this setup entirely, just everything about it. The next formation we're looking at, it's on Euro Swiss franc on the 1 hour chart. This one's slightly harder to spot just because of the XA leg. It's not ideal just because of this choppy price action that's going on. But if we just go from high to low, get our B point, which comes in at a 0.786. We've just got above that, which is perfectly fine. And we're looking at a 1.272. And that completes in this area here. We've got 1.272. This is based on an XA projection. Of course, the D point is higher than X in this situation. This is a bearish butterfly. We're looking for that B point to be as close to that 0.786 as possible. We're roughly 1% above, around about 1% above, which is perfectly fine. It's still a valid formation. And if we just highlight that, going from X to A, and remember, we're always going from highs to lowest, such as A point. It could have been over here, but we really want to go with the lowest point in that area. We're using this as the A point. Same with the B point. We're not going with this area here. Of course, this high exceeds this high here. We're really wanting to go with the highest point. We want to be really precise and exact in our formations and identifying trading opportunities. We go from X to A. We can see price confirms that 0.786. It goes slightly above. Of course, the buyers are now out of the market. Sellers take control and they push price down to the C point. And this comes in at around a 50% retracement, a 0.5 ratio. And if I just go from A to B to highlight that, and you'll see that price is closer to the 50% than it is the 0.618. If I just add in these two ratios, I'll move these across. So we're going from A to B. This is the two price levels we're looking at. You can see that price is definitely closer to that 50% measurement than it is 0.618, which would be the next ratio. And therefore, we consider this a 50% retracement level at the C point. And that best complements the potential reversal zone, just the overall setup. The symmetry of this pattern, just going from these price legs, it's not ideal. The C to D leg does complete in a shorter space of time. And like I said, a lot of the things we're talking about just now, it will all be explained in greater detail. The 14-day course is really the foundation for successful trading. We're putting forward all of the principles that we use and that you should utilize in your own trading. And then once we get to the further education, we'll start laying down more advanced principles that we use in the market, more advanced rules. We can see the XA projection is 1.272. This gives us the X to D, which completes at this area here. And that's really what we're looking at. We're looking to confirm that measurement. And what's even better is, if we use the BC projection, add in that 2.0 ratio, we can see how close that forms to the XA projection at the D point. And this just sets up the potential reversal zone. The additional measurement also forms in this zone as well that we're looking for. And that's when we get the aggressive reversal. We can see exactly after the confirmation of this D point. That's when we get the reversal. And look how aggressive that move is to the downside. And we would have closed the position. The take profit level, my best guess, it would have been around about this area here. Would have been in this situation. It could have even been a bit lower. And that's when we would have closed the move and we would have been in profit. We would have moved on to the next trading opportunity. Now our next pattern we've got to cover, this is our last topic for today. We're going over the bullish and bearish crab. And our final pattern today, we're going to cover the bullish and bearish crab. And first of all, we've got a bullish crab. I'm going to do the same as before. We'll cover the formations on the slides and then I'll give you a market example. We've got our XA retracement to get our B point, followed by an AB retracement for C. Now in this structure, the D point is really overextended. It signals in an extreme state of price action where it's extremely overbought or oversold. And the D point, you really get aggressive reversals in these kind of formations. The B point, we're looking at 0.382 to 0.618. We're really looking to confirm that minimum 0.382 measurement. And the 618, we don't want to go too far beyond that. Like other formations, there is a certain degree of flexibility in these measurements. And this won't be defined until we go into the Harmonic Mastery course. The C point, we're looking to confirm the minimum 0.382 and the maximum 0.886. The BC projection, we're looking at 2.618 to 3.618. We can see how overextended this is already because we haven't used the 3.14 or 3.618 ratios yet. Most of the formations we've covered, such as the bat pattern, we're really looking for a maximum of 2.618. In this situation, the minimum is 2.618. So we can see how overextended this is already. And the X to A projection is a 1.618. So the D point will be defined by the 1.618 XA projection, and this is always beyond X. We're now looking at a bearish formation. This is, of course, we're looking to short and sell once this pattern completes. We can see the D point overextended. It's a 1.618 projection of XA. The B point, we're looking for a minimum 0.382 and a maximum 0.618. Just for the purpose of the 14-day course, just like our other patterns, we're really looking to confirm exact ratios. We want to be precise in our trading. This is a good habit to get into. And then we can introduce more of a flexible framework. Once we're more comfortable with our trading, we can take it to an advanced level. But the reason I don't introduce this in the 14-day course is because I want to eliminate any room for error. And this is where a lot of traders go wrong. They fail to understand what constitutes a valid pattern. So if we can just look at the exact ratio alignments from day one, it really will just set good trading habits. The C point, we're looking for a minimum of 0.382 and a maximum of 0.886. Can't go too far beyond that measurement. The BC projection, we're looking at a minimum of 2.618. We really want to confirm that minimum measurement, and the maximum of 3.618. And the X to A projection, of course, this is an extended formation. We're looking at a 1.618, and this is an X to D measurement. It sets up the D point in the potential reversal zone, and we're just looking to confirm the BC projection and the XA measurement in that potential reversal zone. And just like with all of the other structures, there is an additional measurement, and this won't be defined until a later point. So let's head back onto TradingView for the final time today, and we'll cover the bullish and bearish crab. Our next pattern is a bullish crab on Great Britain pound US dollar, and we're looking at the 30-minute chart. First of all, we want to identify this M-type structure. The crab pattern can be quite difficult to identify as a beginner, and it will take some market experience to familiarize yourself with this type of setup. Just because the D point is so extended in this formation, it can be quite hard to identify that M-type structure. Unlike the bat and the Gartley, it's far easier. We're looking for a B point around about 0.618. We don't want to far exceed that level. The C point comes in at a 50% retracement just below that. And then the D point is defined by the 1.618 XA projection. And we're looking for a 3.618 to complement this area. We can see that price actually exceeds that, but we want it to be within a close proximity. Price can exceed this ratio. Now I'm going to explain every individual measurement in this pattern. First of all, we'll start off with the B point. We're looking for a 382 minimum and a 618. And like all of our other formations, the B point does have a certain threshold. In the crab, we're really looking for price to be closer to the 618 than the 786. And this is where a lot of traders go wrong. They take this flexible framework where price can slightly exceed a measured level, and price will be at 0.76, and they're still looking for a crab formation. And we know that price is closer to the 786, so we're really looking at a butterfly. So we need to be strict in our trading. Ideally, you do want to look for exact confirmations at these measured levels, but price can exceed. It can exceed the 618 or the 786 in a butterfly, but you really want it to be within a very close proximity, within a close area. The C point, we're looking at a 382 to a 0.886. And we can see price confirms the 50% just below it. It's closer to the 0.5 measurement than the 382. Therefore, we consider this a 50% retracement level. The D leg, we're looking at a maximum of 3.618, and this actually complements the potential reversal zone. It complements the XA projection for the completion of the pattern. And if I just draw in this 1.618 measurement, just to highlight the potential reversal zone, what we're looking at here, you can see how this 3.618 forms within a close area of the 1.618. Price confirms that ratio, the maximum ratio we really look for in a crab. It pushes lower, confirms that 1.618, and then that's when we get the reversal. So this is what I'm talking about, confirming all of the ratios in the area. If price confirmed that 3.618 but didn't confirm the 1.618, we don't take the trade. You want to be extremely strict in your trading, and that's what sets you apart from the losing traders. If you're really precise and accurate in your own trading and you're thorough in your measurements, then you'll have a greater potential for a reversal in that area. Being strict in your own trading, you'll have a greater potential for a profitable opportunity as well. But if you get lousy in your trading and you're only confirming maybe one or two measurements and you decide, oh, it's okay, I'll just take the trade, what you'll find is you'll be inconsistent long term. And that's not what we want. So we can see once we confirm all of the ratios in the area, that's what we're really looking for. That's when we get the reversal, and we can see that price reverses off of that D point. And we would have confirmed the take profit level probably in this area here. This would have been this wick that confirmed the final take profit level. If not, we can see that price pushed higher, and then that's when we would have got the confirmation and we would have been out of the trade. But more than likely would have been this area here, and possibly a little bit higher. The next formation we're looking at, this is on US dollar, Japanese yen on the 1 hour chart. And this is an interesting situation because we do have two patterns here. We're going from the highest point to the lowest. We actually have a bat pattern, and we can see it prices close to that 50% retracement level. We've got a 0.54. We really don't want price to exceed the 0.55. We're really looking at within a 5%. The C point, we're looking at 0.75, so it's roughly around about the 0.707 or 786. I would go for a 786 measurement. And then we're looking at a 0.886. And this is what sets up the pattern. It looks like the 1.618 complements that area. Possibly a 2.0 measurement up here. I'll just draw this in. 1.618, possibly a 2.0 confirmation. So we can see price tested this 2.0 before we got the reversal. And the reason I'm showing you this bat pattern is to show you how often these formations occur in the financial markets. We can see we got this reversal, and this is where we would have confirmed the take profit levels. A nice reversal off of that 2.0 measurement, and this was of course a valid bat pattern. And within that same measurement, after that successful bat, we're then looking at a crab pattern. We can see it comes in at 50%. We're looking at a B point between 0.382 and 0.618, as close to those measurements as possible. We want to confirm the minimum 0.382. The C point, it's roughly around 0.786 as the measurement we're looking at. And then we're looking at this 1.618 X to A projection for the D point. And we can see, just drawing in this BC projection, how closely this 3.618 forms to the 1.618. It's almost exactly the same price level. And that's really what we're looking for. It's a nice confirmation. As soon as price confirms the 1.618, and I'll just draw that in for you. I'm sure you're more than aware where it completes by now. It's always good to draw in the levels manually as well, just to see where price is forming and where it's reacting. So we've got these two measured levels. Price confirms both of them. It pushes just a little bit higher, and then that's when we get the reversal. And it looks like price is holding the support trend line very well. I'll probably need to readjust that. And that's really what we're looking at. Looking for price to move to the downside. We're looking for a close below this support. And then that will kick off the move, and then price will start downtrending. If this trend line holds, we could end up seeing this being a losing trade. If we see another impulse to the upside, like we've seen before, this uptrend continues from C to D. But really, we're looking for a close below this trend line, and then a move to the downside. And this is something I talk about in day 11. Talk about confluence and using other technical working tools in alignment with your harmonic patterns. And it really provides a powerful framework for your trading. I hope that was a clear enough explanation on how to identify these patterns in a live market example. Let's head back to finish off the rest of day 10. And we're now looking at a rookie mistake. Moving on to rookie mistake number 10. And this one is trading one variety. This applies directly to harmonic trading. You have now learned 4 types of harmonic patterns, which are of course the bat, Gartley, butterfly and crab. What I want you to do is take advantage of all of these formations and not just one. Now you will have some patterns that occur more than others. It's granted you will probably find a bat and a Gartley more often than you will find a crab. But I don't want you guys to restrict your opportunities. I want you to aim to maximize your potential, aim to maximize your opportunities, analyze as much as possible, especially during the early stages. And if you find that a bat or a Gartley and a butterfly are your most successful patterns, then you can double down on those if you choose to. But in your early stages of trading, especially during the learning stages, all I want you to do is start identifying the structures and maximize your opportunities. Aim to analyze as many patterns as you can. Again, reiterating the fact, do not restrict your potential. Aim to maximize your opportunities, analyze as much as you can. Now, to simplify today's module and the previous module, of course, we've went over some very in-depth market patterns. I've included an ebook for you. It's called Harmonic Trading. You can download it below today's video. This has the bat, Gartley, butterfly, and the crab, both bullish and bearish versions. What I want you to do is keep this open whilst you're trading, or print it off. Keep it on your trading desk. Your trading desk will be full of ebooks by now. And trust me, there's more to come. Keep it on your trading desk and use it, of course, whilst you're trading. This will help speed up the educational process rather than having to flick through your notes every time you want to remember the ratios for a certain pattern. Now let's just wrap up for today. Again, another successful module. And what I want to get across is just make sure you're repeating everything you're learning in these modules. When you go onto the charts, it's really all just about repetition. That's what the bulk of the experience right now is all about, repeating everything you're learning in the 14-day course. So when I'm teaching you a bat pattern, or a Gartley, or a crab, or a butterfly, it's all about repetition. Keep applying everything you're learning on the charts. And the more you look for these M and W type structures, the easier it will become when you're trading a live account. Therefore, the easier it will become to manage your trades, to enter a trade, to exit a trade. You'll know exactly what's happening ahead of time. What I want you to do is use your currency pair cheat sheet from day 2. Work your way down from top to bottom. Work through the different trading pairs. Again, you can change the time frame. Work through the 1 hour, the 4 hour, the daily. You can go down to the 15-minute, whatever suits you. And start looking for these M and W type structures. Look for these M and W patterns. Look for a bat, Gartley, butterfly and crab. And as previously mentioned 100 times, you have now learned 4 types of harmonic patterns, and there's definitely more to come. This is just the beginning of your harmonic trading capabilities. You have learned the bat, Gartley, Butterfly, and Crab, if you didn't know already. Now in tomorrow's module, which is day 11 confluence, we will be going over defining confluence, followed by multiple time frame analysis, then trading checklist, and finally step-by-step market analysis. Thank you for joining me in today's module. I can't wait to go over tomorrow's module. This is where we piece together everything we have learned in the 14-day course so far in terms of technical analysis. So we have got a full in-house strategy that I'm going to teach you how to actually analyze the chart step by step. Again, thank you for joining me in this module, and I'll see you on the next video.